Hello, friends. How are you today? Welcome to a financial literacy made easy program. In this program, we can learn about how to be wealthy, earn passive income through smart investments. Today's topic is about accounting. We're going to learn about how to look at an investor's point of view. The accounting is like a bit high level. Just look at it. Not we're not going to learn about more accounting practices. It's just about how to what to look into a company when you want to invest in that, especially when you buy equities in the company. Let's have a glance. So we look what we're going to look at in the companies today, like financial statements, basically, which helps investors to determine the company performance, how the company is performing since past few years. So that way we can see, yes, this is progressing. So whether it's if this company is going to be profitable for me if I invest in that shares or stocks in that business, and then we're going to read the company's income and expenses statements like assets and liabilities and the cash flow statements here. So basically understand what is accounting, how important is that. So we learned about the taxation part, how to look at the tax in previous session, but now we're going to look at accounting. So the numbers are very important to to become rich, especially track your finances. So accounting is a financial literacy. It has ability to read the numbers basically, and it is a mandatory skill if you want to do investments or run a business. Let us see what are the basic terminology they use in accounting, like such as assets and liabilities, income and expenses, profit and losses, investments, capital, drawings, data, data, financial statements. So these are the terms you might heard in your life so far. Let us look at the assets. The first one, and what are assets for a business? So when you purchase any shares, equities, bonds, or whatever from the company, so you look at what assets they have. That helps you to understand in deep. So what are assets of a company? Like a business have assets means a property or something of value that is about to help the business in generating cash flow. Like for instance, a courier person has a van, and a courier van which is generating an income back. So that's a cash flow, that is an asset for him. And similarly, a restaurant has a kitchen cooktop or stove or dishwasher. These are the assets, furniture, everything to run the business. So every business owns something that can help it generate income. This is like which I gave examples, right? And other terms which just go through quickly. What is a liability? Liability is the one, the money owed to anyone, such as if they have to pay a loan or unpaid bills, also called liability. And the expenses are the ones which they have incurring expenses, like paid the like utility bills or wages, salary which has been paid. So there's a thin line between liability and expenses. So what does it mean? Liability is the one we about to pay, which has not paid at all. That's unpaid bills. That's what we say. An expense is the paid bills. Say, for instance, if you have electricity bill, you have to pay, or water bill, you have to pay. So if you don't pay within the due date, due time, or you still owe that money, that's a liability. If you have already paid that bill, that's an expense. So that's a difference. Investments, that we invest to make some extra money. That's through shares, bonds, fixed deposits, or any kind of investments like real estate as well. And other sort of like income. So what is income? It's simply as like you receive some income for doing performing a particular job. And then what is the profit? Yes, profit occurs when your income is more than expense. So that's the profit. And loss, if your expense is more than income, that's the loss. And capital is the money which you invest in starting a business. For instance, if you're starting a restaurant business, you need to pay the mortgage, a lease amount, furniture, equipments. So all these are capital investments, which you can borrow from banks, savings, or for friends. And drawings is the what terminology we use when we withdraw some money from the business. That is called as a drawings, a capital drawings, right? You can mention the director fees, or director's salary or something. Debtors. So debtors and creditors is very important. Debtors are the one who owns the business. Like, say for instance, the restaurant had did a catering to any of the customers, and customers still owe the money. So they invoiced, but the invoice has not been paid. So that is debtor. At some given point, they're going to pay it, but people who owns money to the business, that's a debtor. And creditors is the one which business owes them. So it is like suppliers where they buy the machinery equipment, so it could be the stock, they buy, so still they pay the bills, so they are the creditors. Even a water bill or electricity bill also creditors. So these are the overview. Let's see the financial statements. Let's know about it. um, Financial statements refer to statements that shows the performance of the business. So what happens is we look at the financial statements, which we're going to go break down, and how they look like. Basically, what we the financial statements, why we need to look at any company's financial report is that the performance of the company before we invest into that. Say for instance, what it contains is the income and expenses, assets and liabilities, everything they show up, like capitals, how much they have, or how much assets they have, what are the liabilities, how much they withdrawn. So with that, we can determine the figures. All we do is see the figures only here, or numbers, compare between past few years to current year. That's it. So these statements tell you how much profit or losses the business has made. So it helps you to decide whether to invest or not. These statements also tells the current position of the assets and liabilities of the business that for that period. So, for instance, the every year, every country has different financial years. For instance, Australia has a financial year starts from July of every year till June, end of June, and America has from October to September, and then India has from like April to March. So every country has different financial dates, period, financial years. Especially, it's not like we start usually we think why it's not from January to December. The reason, very simple reason, is that in during this Christmas time, December, January, it's a holiday period, so accounting can't be done. So that's why they keep somewhere first, second quarter, or third quarter of the year before, like from February to somewhere between November is the right time. So they keep in the middle of the year. That's suitable for them when everything is normal. Okay, let's see the breakdown of financial statements. So financial statements are divided like income statement. So income statement has income and expenses, which we see that, and they have a balance sheet which has assets and liabilities, and the cash flow statement. Let's have, like cash flow statements have cash inflow, cash outflow, which gives a net cash flow of the business. Let's see those. So this is a simple example, like outline, a very basic one for understanding what the income statement is. So for instance, it consists of income and expenses, and they show the profit or loss earned by the business during the particular period of time. For instance, we'll take an example of a restaurant business, which like very simple income statement of business. So on a particular day, we just take the income for the business has like $10,000, and the expenses deduct the expenses. That's like food, wages, bills they paid for delivery, everything, and that gives a net profit or loss. So if it's plus, it's like $1,500 is a profit. So it's a profit, and if it's less than the $0, anyway, it's a loss. So we know that. Let's look at quickly the balance sheet. So what's balance sheet is about the assets and liabilities the company has it. So the statement consists contains a list of assets and liabilities. Let us see a simple example. A company, a restaurant example again. So a restaurant has a machinery equipments. There's all assets like they have a vehicle, furniture. They have cash in hand and cash in bank. These all are assets. For instance, say the assets it's $25,000, and then liabilities they see they have liabilities up to pay to suppliers, they have to pay to the creditors. So and then they have to pay some loans altogether, like for instance $15,000. Now the assets is $25,000 and the liabilities are only $15,000. So we have to balance a tally assets and liabilities. So for that, whatever the balance like short is $10,000 short we have in this liabilities, we have to add that cash into the business. That's as a capital. So say $10,000 has to be added to tally the assets and liabilities, so that makes it $25,000 both. We'll see in a bigger picture in reality how company does the balance sheet. Now, what is a cash flow? Cash flow is a one like you might heard in retail, any business like retail business or restaurant food industry. They say the opening balance and closing cash flow. Like register, when they open register, they have a opening balance, and when close a shift close the business end of the day, they have a closing balance. So opening balance, say for instance, for a restaurant is say $10,000, and then they have operating and depreciation. They take off different categories of expenses, and then loans they have to pay, and all this. So when they remove that, the end of the day, whatever the balance left over is a closing balance. So we'll have a look at let's do financial statements of Microsoft company. We pulled the annual report online. Just you can Google and see. This is what I want to show an example, basically in real-time industry. The financial statements we have. First, we look at income statements. So this has the financial. It's all in millions dollars, as we see. For instance, we got 3 years comparison for the Microsoft company. So see the income statement here. They have the product services, how much revenue they have. So we look at the figures, say basically saying how much revenue they have. So they say 2019 is 125,843 million dollars, which is good, and the increase to $143 million in 2020 and $168 million in 2021, which is pretty good. So it's progressing. Similarly, we go to the other things. Every cost revenue when it's increasing every year from 2019 to 2021. So the so this how we look at the net income. Finally, we see net income in 2019 is about 39 to $40 million, and increased to $44 million in 2020, and 2021 is $61 million. Means it's really good. So income is pretty good. So this is a first checkpoint we can see. Yes, it's increasing. So that's, and also we see the earnings per share. See how much they're earning in 2019. It was 5.11, and 2020 5.82, and 2021 is 8.12. So it's a good increase. So that's the income statement we can see, pretty good. And then we can see the it's just a comprehensive income statement overall, so which is also increasing every year. So this is one thing. And then balance sheets means we have look at the assets and liabilities of the company. So what's the current assets? So they have say for instance cash and equivalents. They have cash $13,570 million in 2020, and then it's increased to $14 million in 2021, which is a progressing one. So and then see all the current assets. So total assets they have in 2020 is $301 million approximately, and $333 million in 2021. That's like a $32 million like plus increase in the one financial year, which is very good. And see the liabilities and main stars and the stakeholders equity here. So liabilities also like say total liabilities actually were the $72,000 in one year and increased to $88 million. of which they're acquiring more assets and investing. So, and then you can see totals liabilities has increased not much, say from $183 million to $101 million. So because they all paid the taxes and all stuff there, and then you can see the stakeholders equity. So you just say the numbers. Yes, that's an increased 301 to 333. So we can see that how this matching here. So if you see that uh, assets and liabilities, so how much assets altogether is 333,779 for 2020 this year, and the liabilities also has to match the tally here. So 333,779. So it's tallying now. So what happens is they have to put some capital. So the stocks equity they are put in here. Say that's why it is has come up to 333. So it's tallying now. So let's see the cash flow statement. So you see it's cash flow for the end of the year, like the net income, how much they had in 2019 is $39 million, 44 billion approximately in 2020, and $61 million in 2021. So let's add up the other things like depreciation, amortization, stock base, accounts receivable, inventories, everything to the like a cash flow. In the cash flow, what all cash, income, taxes, everything. So net cash flow operations is like it has been increased. We saw that the cash flow is opening closing balances. So that's how it is here. So they have a $52,000 million in 2019, increased to $60 million and $76 million approximately in 2021, which is a good progress so that's a third checkpoint. So we got the income and assets. Balance sheet is also is progressing. The first one is we look at the statements of income and statement, which is first checkpoint, good. Second checkpoint is the balance sheets, it's also good. Assets and liabilities, we saw that. And then cash flow as well, so it's a good cash flow. So yeah, so overall cash is also increased from $11,000 million to 13,000 billion, and then to $14 million per current annual in year like 2021. So it's a progressing altogether. These are three checkpoints how we look into a company's progress so that we can invest on that. So then we look at the what is the share market currently, and it's improving or not. Hope you understand the how to look at the balance sheet or financial statements of a company or blue chip company. So let's run a summit now. So look out for at least two or more financial statements of any of a blue chip company which you want to invest actually. So look at the income statements, balance sheets, and cash flow. Prepare a comparison table in Excel sheet. The only the amounts, like the final net income and assets and liabilities and the cash flow. So just within three different companies, and see that if you say, for instance, if you have a $10,000 in your hand, so you want to split in like top three companies, then pick up top three companies, do a research, and see how they're performing, and how much you want to put the ratio. So for instance, like one of the companies having very good figures, so you can put like half the money, like $5,000 into that. And if another companies are doing like better, so you just split another $5,000 between those two. So it's up to you how much ratio. It depends on a risk factor, how much risk you want to take as an investor. So hope you understand the overview of the accounts and how to look at the financial statements of any business before you invest. Thank you very much for watching the video. Hope you enjoyed. Have a good day and a happy investment.